Thanks again for everyone for joining us for this edition of Market Talk. For those of you joining us for the first time, my name is Ryan. I'm the market strategist at IG, and later on, my colleague Nabil Mata, Premium Client Manager, will be going through the technical and price actions on some of the key events this week. On my part, I'll be going through some of the macro events that's been happening and also recap what's happened on Monday and what you should look out for this week that might affect Forex or stocks. So a quick disclaimer before we jump into the details. So this is just for education, not any specific recommendations. All right. So quick look at this week's action. At any point of time, you can also ask questions through the chat box, and we'll get to it at the earliest opportunity. So this week, you had actually quite a busy week. You had ECB just overnight giving some comments by Mario Draghi. He mentioned bond purchases might be a possibility of expansion of his stimulus program. So that's been pretty positive for Europe stocks last night. And Monday, a big news from Japan. Japan's in recession. It wasn't expected. The market consensus was looking out for GDP for the third quarter, a rise of 2.2%. Came in negative at 1.6% drop. So this pushes back a lot of plans by Japan. It wanted to raise its tax hikes. It wanted to give a tax hike, but it's probably going to shelve this. And then you've got Shinzo Abe calling for elections possibly. So these two things are probably going to be something to watch out for. So all that saw an initial spike in the dollar yen, but it's since corrected. So it's going to be very interesting to see what's going to happen for the rest of the week with some of the Japanese macro data. You have the Bank of Japan coming out tomorrow with some policy statements and its rate decision. Oil and gold still following the trend. Still a lot of pressure. You're seeing oil pushing new lows, and dollar-yen strength means inverse relationship typically for gold, and we're seeing that happening. And of course, yesterday was quite a big event, Hong Kong-Shanghai Connect. So this ahead of this connection, there was a lot of people jumping into Chinese stocks, expecting it to rise. What happened yesterday? Markets was a bit muted. We saw a bit of, I guess, disappointment. The volume wasn't as high as what people were, I guess, were watching out for, and in a way it's been priced in. So there was a bit of profit taking on stocks like the Hong Kong Exchange. But on the long term, we should be able to see some upside for Chinese stocks because this is, I guess, a lot of pent-up demand for access to some of the stocks that investors previously could not access, especially on the retail sector. Looking at this week, Monday we had Japan yesterday, and New Zealand retail sales and US manufacturing. Nothing unusual. New Zealand retail sales were a bit better than expected, and that helped to push up the Kiwi. Today, RBA minutes, no surprises as well. They talked about the same thing, keeping things at status quo. China Housing Price Index, that's been something we've been watching out for. Last reading came in at negative. So I will be watching out to see if this Housing Price Index, what it spells for the future of the economy, because the housing sector accounts or has a knock-on impact on at least 40 other sectors like construction, furniture, cement. So this is one reading you should be keeping an eye out for as a gauge of how consumer sentiment is going to swing. If the housing price index improves from the last reading of minus 1.3%, it's a signal that consumers' confidence is coming back, spending is coming back. So this is, I guess, we'll be watching out to see if this will bottom out. And later on in the afternoon, you've got UK CPI and the Germany economic indicator. Germany is one to watch as well. It's been a bit stuttering. There's been some concerns that things might be slowing down on the Germany economy. So That this will be the latest indicator of where we'll be heading in terms of Europe. Tomorrow is a big day for Japan. Bank of Japan's rate decision policy statement. This could potentially see dollar yen going pushing new highs, because with all that bad news coming out from Japan yesterday, the expectations are for further stimulus measures. So we'll see if we're going to get a dovish tone from the Bank of Japan, and if that happens, we're probably going to see more weakness in the yen pairs, or weakness in the yen. And later on, central bank again from the Bank of England, and housing starts, and US crude oil inventory. So I've highlighted in red on the overall calendar the more significant events to watch out for. And on Thursday, FOMC meeting, another possible dollar yen impact. If the FOMC gives another indication that the US economy is on stronger footing, it raises its outlook, this could push the dollar to another high against the yen. And then you've got the Japan trade balance coming in. Judging from the previous round of numbers, things haven't been doing so well. So we'll be expecting some weak or soft numbers on the trade balance front, and that could be another potential push for the yen downwards. And China's numbers always interesting to look at. Manufacturing PMI at 945, and you can tell from the chart you've got UK retail sales, US CPI, and US manufacturing. Just some by the way numbers for you to have an overall gauge on the global economy. All right, one thing to watch out for. Friday is pretty quiet, but Mario Draghi is going to give a speech again. So just going to be watching out for any possible off-the-cuff comments on the European economy. So possibly a movement on the euro dollar to keep in mind on Friday till the end of the week. But most of the action, you can tell, is going to be happening tomorrow and Thursday, mostly on the dollar yen. And with all the weakness in the yen, we could possibly see in the medium term some upside for Japanese stocks and the Nikkei. So we're expecting in the long term significantly higher levels for Japanese stocks, because there's a central bank push for Japanese stocks to be much higher value and for foreign investors to get into the to push the economy higher through stocks. So this week, I'm going to look at sector rotation as to give you an idea. What are some of the stocks you can be looking out for depending on where you are in the business cycle, where you are in the economy? So one way to figure out what are the possible outperformers in terms of the stocks is to look at which sectors will benefit from the business cycle, and then using a top-down approach, look at which are the leaders in these sectors. So it's typically divided into four stages. You've got early, mid, and late part of the expansion, and then finally ends with a recession. So going to the early part, these are the characteristics to look out for. If you can guess by now, we're pretty much in between the recession part and the early recovery part. We're seeing some signs of possible green shoots of recovery, but we're still not quite there yet. But some of the characteristics are there. Credit is improving. Profit from some corporates through the earnings, you're seeing some signs of it ticking up. Policy is still stimulative, so the credit is there. So in this environment of low interest rates and possible hints of improvement coming, it typically means good news for consumer discretionary stocks and financials, because you've got this possible surge in spending coming out. So typically good news for autos, real estate, banks, so like OCBCs, DBS, and UOB. And the interest rates coming up is good margins, better margins for the banks as well. And the other sectors worth mentioning as well, tech and industrials. Historically also outperformers. We've got businesses getting more confidence and then starting to buy into capital goods. And this is also reflected in the mid-cycle at the peak of the growth. That's where business confidence is at its highest. You're getting people buying into industrials. They need more equipment. IT spending is up. Software spending is up. So we've got the likes of Cisco, Intel, Google, Microsoft, all usually doing pretty well. And this is at a stage where policymakers really don't have to do anything. Everything's going quite rosy. It's in equilibrium. So it's policy neutral. And then finally, you've got this stage where things are starting to overheat a bit. And then you've got governments getting to be a bit worried. So they're going to tighten credit and you're going to see policy contraction. And this part is where you see earnings start to get under pressure, credit tighten. Because of all this inflationary pressure, governments are going to tighten their interest rates. So in this environment, commodity prices usually has been pushed up by some inflation. So you're looking at energy stocks historically outperforming the likes of oil companies and energy, other energy-related stocks. Healthcare as well. And finally, in the recessionary period, you're looking at pretty much most stocks not doing well, but in terms of outperformance, you're looking at the more defensive side of things. People still need to buy their toothpaste and the things they need to do everyday stuff. So consumer staples in the form of P&G, Unilever, the healthcare stocks, utilities, these have historically been the outperformers when times are bad. So this is just a quick snapshot in terms of historic outperformers. So just to bear in mind, these are just historical patterns and it does not always 100% pan out the way in terms of outperformance. So another way to complement this is to look at other macro fundamentals. What's happening in terms of things impacting the industry? What's happening with oil prices, regulations? Is there an epidemic that might impact the health sector? So another one is bottom up. Does this company have any breakthrough products? Some of you are quite bullish on Gilead Sciences because it has some approvals for some of the drugs. And you can also look at currency exposure. If it's doing a lot of business in a particular market, where is the currency movement going? And I mentioned oil just now. We've seen oil drift to lower lows, and there's still no certainty which direction it's going, but generally with low oil prices, it's good for the economy because household budgets are going up. People need to spend less, so they're going to spend it in retail and F&B. So these are some of the stocks you can look at when oil prices are under pressure. People have more discretionary budget to put into their expenses. And airlines as well, typically a beneficiary of oil, lower oil prices. So there are some projections. Overall global airline industry operating margin this year is 11%. The forecast with oil prices at right now is for operating margin next year to rise to about 14% in 2015. So margins for airlines expected to hit up if oil remains under pressure. Of course, the oil producers, those selling the oil, will be having a tough time. We've been following BP's earnings. They were hit by lower oil prices. The likes of Chevron and Exxon managed to escape because they have a more diversified business. They have a strong refinery business. They did see some production under pressure, but overall they escaped. But you can expect oil-related companies, the more pure plays like Santos and Oil Search, and we've also seen Sembcorp Marine, a lot of bears on that stock. So what to look out for in terms of oil? You have the OPEC meeting end of the month in Vienna. So all these member countries getting together to decide, should we cut supply? So cutting supply will help to hike the prices. At this point, the market is very mixed if they can coordinate anything together. The chances are right now things will be status quo at this point. So this is going to be something to watch out for to see if they can get something together, because not everyone's in the OPEC group. So even if they decide on cutting supply, someone outside the OPEC group could still act independently to influence supply. So this is something good to know and watch out for if you want to look at how oil prices are going to hit beyond November. Okay, we've got a question from Lenny. Japan current situation, how far will the yen weaken? Okay, so that's I guess it depends on your time frame, Lenny. So right now I've been seeing it last week pushing 116, and then yesterday's a bit of a shocker in the GDP, so it spiked to around 117. So it's not going to be a surprise to see it push higher. I guess it's just going to be a matter of time when we see the likes of 120 or 150, which will still be possible, but probably further down the horizon. And I think it's going to be a mix of, to look at dollar yen, need to look at a lot of price action, technicals, and maybe mix in a bit of fundamentals. I think Nabil will get a chance to look at some of the forex action and give you a good gauge of where the resistance and support levels will be for dollar yen. Mr. Tiam's got a question on US recovery. Yes, it's what stage is it in? Right now we are seeing a lot of indication that the US is getting traction. You've got on the jobs front above 200,000 jobs being created every month. That's above average, but we are still holding out on some of the other indicators like wage growth. So that's the last one of the key indicators that Janet Yellen is waiting for to see if it's a clear recovery, because that's what's going to be putting money in the consumer's pocket to spend more. So that's the next sign to see if US is going into this early recovery stage. If I were to put it into words, it's just under early recovery. We're waiting for a few more signs to get into that early recovery stage. Singapore, I think we can expect slower growth next year. I wouldn't put it in anything beyond early recovery as well. So a lot of economies seeing a lot of pressure with trading partners not doing well. We've got Europe under a bit of struggling. China also next year, they're talking about trimming their growth forecast. So a lot hinges on where China is going, and that will have a knock-on impact on the growth prospects of the likes of Singapore. So Singapore probably also trying to get into the early stage recovery. Okay, before I hand over to Nabil, do we have any more questions? I've got one from Lenny. I'll come back to you on that in a bit. In terms of autos, right now I'm more bullish on the likes of Mazda, the Japanese exporters, because of that dollar-yen advantage. Weaker yen typically means good news for exporters, makes it more competitive. And then you've got this big central bank push to buy its own stocks. So a lot of movement from a central bank into the local stock market. So there's a lot of expectations. The Nikkei and a lot of the export-led stocks will be leading the gains. Okay, on the crude oil front, what's the outlook? Right now we're having a lot of pretty much two factors driving lower prices. You've got this scenario of oversupply, the US shale oil boom that's been feeding into the supply chain, and then you've got the likes of Saudi Arabia. They're still not very on board on cutting supply. So OPEC is still not in consensus with what to do. So once one OPEC member cuts supply, you've got another one like Libya pushing up supply. So that's not helping on the supply front. And then on the demand front, you've got slowing economies. Pretty much only the US is showing some upside, and they have their own oil boom. China's growth outlook is expected to slow down a bit. So no one's really pushing up the oil demand front. So the only thing we can look forward to on the oil front is for a very strong coordinated cut from the OPEC meeting. So that will happen on the 27th of November in Vienna. We should be able to see some positioning ahead of this. And I think most expectations are for lower oil prices at this point.